Let's be honest, you're spending all your time hunting for the perfect indicator, but the truth is, your charts will never save you. It's a brutal reality most aspiring traders refuse to accept. They chase a holy grail strategy, a secret algorithm, or some guru selling the magic formula for pulling cash out of the market, but it's all a lie. The real reason you're losing isn't your strategy, it's you. That's tough to hear, I know. But most traders don't fail because they're undisciplined in life. They fail because they apply mental models designed for a stable, 9-to-5 world to a game built on pure, raw uncertainty. It's that knot in your stomach right after closing a loser, the one that whispers, just one more trade to make it back. That's not a strategy problem, it's a psychology problem. It's why two traders can follow the exact same system, yet one builds wealth while the other blows up their account. The difference isn't the rules they follow, it's the mindset they bring. The stats don't lie. According to a recent FINRA report, 72% of day traders ended the year with losses. Over a 5-year period, only a tiny 1% managed to stay profitable, and across the broader retail world, failure rates can climb as high as 89–95%. This isn't because these people are reckless. Many are brilliant professionals in other fields. The paradox is that the very traits that make them successful elsewhere, like being decisive and driven, often blow up in their faces in the market. In this video, I'm going to expose the 4 uncomfortable truths, the psychological habits you lack, that are keeping you from ever being profitable, and I'll give you a clear plan to fix them. 1. The lack of radical acceptance. The first and most destructive flaw is your inability to radically accept a loss. Behavioral finance has a name for this: loss aversion. Studies by pioneers like Kahneman and Tversky show that the pain of a loss feels roughly 2 to 2.5 times more powerful than the pleasure of an equal gain. In trading, this is a financial death sentence. It's what chains you to a losing trade long after your plan screamed get out, all because you're hoping it'll turn around. Hope is the emotion that bankrupts traders, making them hold on for a comeback that never arrives. Think about your last disastrous trade. You knew your stop loss was hit, but you nudged it down just a little further, didn't you? You told yourself it'll come back. You projected your hope onto a market that doesn't know you exist and doesn't care about your bills or your need to be right. That's your ego talking, and it's costing you a fortune. You've seen traders sit frozen, glued to the screen, praying for a miracle, only to finally capitulate and exit with a catastrophic loss. The strategy didn't fail. Their own brain sabotaged them to avoid pain. So what's the fix? Radical acceptance. Profitable traders understand that losses aren't just a possibility, they are a guaranteed part of the business. They are an operating cost, just like inventory for a shop owner. You have to define and accept your maximum risk before you ever click the buy button. This isn't about being pessimistic, it's about being a professional. A pro has a documented plan that dictates their entry, their profit target, and most importantly, the exact point where the trade is proven wrong and it's time to get out. The solution has to be mechanical. Use a hard stop loss on every single trade. This automates your defense and rips the emotional turmoil out of cutting a loser. If you have a rule like 3 strikes and you're out for the day, you obey it without question. When that third loss hits, you shut the platform down. No negotiating, no one last trade. When you accept the potential for loss before it happens, you strip it of its emotional power. Your job isn't to be right, it's to manage risk so you can survive to trade tomorrow. 2. The lack of patient stalking. The second habit you're missing is patient stalking. Instead, you're an indicator hopper and a strategy chaser. After a couple of losses, you're convinced your system is broken and immediately start Googling for a new, better one. You pile so many lines, oscillators, and moving averages onto your chart that it looks like a toddler's crayon masterpiece. This isn't analysis, it's a desperate search for certainty in a world where it doesn't exist. This frantic behavior is driven by pure impatience. Beginners think trading is about constant action, but professional trading is mostly about waiting. Markets spend most of their time consolidating and chopping around, not trending. Impatience turns aspiring traders into gamblers, forcing low-quality trades just to feel like they're doing something. You know the feeling. You've been watching the screen for hours, you're bored, and you jump into a random trade out of frustration. Bam, stopped out almost instantly. Sometimes the most profitable action you can take is no action at all. The solution is to stop being a frantic hunter and become a patient stalker. A top-tier trader has one or two well-defined, high-probability setups, their A-plus opportunities, and they wait for the market to bring those setups to them with extreme discipline. This isn't a passive act, it's a highly active form of self-control. It means knowing your edge inside and out and having the guts to only risk your capital when the conditions are perfect according to your plan. To build this skill, you have to simplify. Get rid of 90% of the junk on your chart. Focus on one or two key signals that define your edge. Then, make a promise to yourself to only take trades that meet every single one of your criteria. If that means you don't place a single trade all day, or even all week, so be it. Patience preserves your mental and financial capital for the trades that actually matter. The pros know that a handful of high-quality trades are all it takes to make great returns. Stop chasing every wiggle on the chart and start stalking the moves that count. If any of this is hitting a little too close to home, do yourself a favor and subscribe. We're all about the real, hard work of trading psychology that actually builds profitable habits. 3. The lack of a systemized edge. The third habit you're missing is a truly systemized edge. Let me ask you this: if I handed you a napkin right now, could you write down your exact, non-negotiable rules for entering and exiting a trade? If you hesitate, or if the answer is no, then you don't have a trading business, you have a gambling habit. Most traders' decisions are driven by feelings, not facts. They trade based on what they feel the market is going to do, which is a fatal mistake. A real edge isn't about having a 90% win rate. In fact, many consistently profitable traders are wrong more often than they're right. Their edge comes from having a positive expectancy, meaning their average wins are significantly larger than their average losses. It's not about being a genius who predicts the future. It's about being a disciplined operator who can flawlessly execute a plan over hundreds of trades. The market doesn't reward predictions, it rewards disciplined risk management. Your ego wants to be right, to perfectly call the top or bottom, but that's a sucker's game. A systemized edge yanks your ego out of the driver's seat. It forces you to think in probabilities, not predictions. Without a system, every tick of the price is an emotional roller coaster. You cut winners short because you're terrified of giving back profits, and you let losers run because you're hooked on hope. You're trading your P&L statement, not your plan. The solution is to become a process-oriented trader. You must define, document, and religiously follow your edge. This means creating a detailed trading plan, your personal rulebook that leaves nothing to chance. It should specify the markets you trade, the timeframes you watch, your exact entry triggers, your stop-loss placement, and your profit-taking strategy. From now on, success isn't measured by whether a trade made money. It's measured by how perfectly you followed your process. If you took a loss but followed your plan to the letter, that's a win. If you banked a profit but broke your rules to get it, that's a failure. This shift in perspective is what separates the amateurs from the pros. Your edge isn't an indicator, it's your discipline. 4. The lack of an unbiased review process. The final habit you lack is an honest, unbiased review process. This is the grunt work that 95% of traders refuse to do, and it's a huge reason why they're doomed to fail. When they win, they thump their chest and credit their own genius, when in reality, it might have been blind luck. When they lose, they blame the market, their broker, or manipulation, anything but the person staring back in the mirror. They curse their mistakes without learning from them, trapping themselves in a cycle of failure. The hard truth is that in the heat of battle, your brain lies to you. When fear and greed hijack your thinking, you can't see your own mistakes in real time. That little voice tells you to revenge trade to get your money back. It promises you'll be more disciplined tomorrow. These impulses destroy your judgment and cause you to deviate from your strategy. Without an objective review process, you will never break this cycle because you're not collecting the data to see your own self-destructive patterns. The solution is to become a ruthless analyst of your own behavior by keeping a detailed trading journal. And I don't just mean a spreadsheet of your entries and exits. A proper journal tracks your emotional state before, during, and after each trade. Were you feeling impatient, overconfident after a big win, scared to pull the trigger on a valid setup? Tracking this data is how you find the root cause of your biggest mistakes. This process forces total accountability. You can't blame the market when your journal clearly shows you broke your rules and chased a trade out of FOMO. It's not glamorous, it's tedious. It's uncomfortable because it forces you to face your weaknesses head on, but this is the work that separates the professionals from the hobbyists. At the end of every single week, review your journal. Don't just look at the profit or loss, look at your process. Celebrate the trades where you executed your plan perfectly, regardless of the outcome. Analyze the trades where you screwed up and ask yourself why. This is how you build self-awareness, the ultimate edge in trading. It's how you stop making the same dumb mistakes and start building the mental fortitude required for consistent profits. So there you have it. You'll never be a profitable trader if you keep looking for a holy grail on your charts while ignoring the real problem in the mirror. It's not about finding the perfect system, it's about fixing the person running it. It's about having the radical acceptance to take a loss like a professional. It's about developing the patient stalking to wait for your A-plus setup instead of gambling out of boredom. It's about building a systemized edge so your decisions are based on a repeatable process, not a gut feeling. And it's about maintaining an unbiased review process to hold yourself accountable and learn from your screw-ups. Becoming profitable isn't about outsmarting the market. It's about doing the hard, internal work that most people are too lazy or too scared to do. The market doesn't test your strategy first, it tests your discipline. So start today, pick just one of these 4 habits and make it your obsession for the next 30 days. Stop looking for magic signals and start looking for real answers within yourself. The journey is hard, but it's the only one that actually leads to consistent profitability. If this was the wake-up call you needed, subscribe for more content on mastering your trading psychology and let me know in the comments, which of these 4 habits do you struggle with the most?